This video, we're gonna cover all the rules, all the must-know rules when it comes to estimated taxes. How's it going, internet? So good to see all of you. My name is Mike the CPA, and thanks for tuning in to Money in Life TV. This channel is all about learning about finances, investing, taxes, and more. Thank you everybody for continuing to support the channel by leaving comments and dropping likes on the videos. It really helps things out, so I really appreciate it. I have a lot of information I want to cover with you guys today, so let's just dive right into it. Now, the handout that I'm holding in my hand here, that I'm kind of using as a script or a memory jogger, is completely free to download, so make sure to download it. I'm going to leave a link down in the description section of the video and the comment section of the video.
So, Mike, why should we even care to learn about estimated tax payments, man? I got some Fortnite to play over here. Is this something I really need to know?
Well, actually, Chipper, it kind of is. So pause your Fortnite.
Yeah, I know, I just said pause Fortnite.
And listen up. So why do you need to know about estimated tax payments and what they are? Well, here's the thing. So an estimated tax payment is a way for you to keep current on your taxes throughout the year, especially when your withholdings are not enough. Maybe in 2018 you went to file your tax return and you owed a bunch of money. With estimated tax payments, you could have made up the shortfall throughout the year, so you didn't end up going in debt with the IRS if you couldn't pay your taxes come April 15th. Another reason to know about estimated tax payments is, let's say during the year, you start doing a side hustle or something that starts to generate a significant amount of money on the side, like your own business. Let's say you make another $5,000, $10,000, $15,000 during the year that you didn't expect to make, but you didn't have any tax withheld on that money. Well, an estimated tax payment is a way to keep current on your taxes so you don't get stuck with a huge tax bill come year end if you end up owing. In a nutshell, estimated tax payments will help you stay out of debt with the IRS and keep you out of trouble with the IRS. I really wish this stuff was taught in school. So estimated tax payments are great when you're trying to keep current with your taxes on income that is not currently subject to tax withholdings. What are some examples? Some examples include self-employment income, interest, dividends, alimony, rent, like from a rental property, your pension, although you can choose to have money withheld from your pension checks, capital gains, prizes, awards, things like that. Wages are not on this list because wages are subject to withholdings. But we're going to come back around to that in just a bit of why you still might use estimated tax payments even if your only income is wages. So what happens if you don't make estimated tax payments? When are you supposed to make estimated tax payments? How do you even know? Nobody teaches you this stuff. So if you don't pay enough taxes in on your income throughout the year, this is what can happen. If you do not pay enough by the due date of each payment period, you may be charged a penalty, a tax penalty, even if you are due a refund when you file your tax return. So what the IRS does is they take a broad look at your income and they annualize it. Then they kind of break it down by quarter and they look at how much tax was withheld based on, when you paid it and how much income you made during those different quarters. And if you didn't keep current enough in each quarter or in each time period, they might charge you a penalty, a tax penalty, for that particular quarter. This isn't an issue for most people. For most people, it's not an issue. You'll never see it. But for people who are making hundreds of thousands a year, 200,000 or more, or have a side business, that's where these penalties can come into play. Now let's talk about who has to pay estimated tax payments or when a person has to pay them. A person who expects to owe at least $1,000 at the end of the year after withholdings and refundable credits are taken into consideration. B, a person's withholdings and refundable credits will be, or when they're less than 90% of the projected tax for the year. Or C, a person's withholdings and refundable credits if they're going to be less than 100% of the tax shown on their prior year return. I put a note here. Please note there are special rules for farmers and fishermen. See publication 505. So just to recap, if you expect to owe about $1,000 after all of your withholdings and credits, that's when you're gonna have to pay. If you've paid in less than 90% of your tax for the year, that's when you might have to pay estimates. Or if you haven't paid in at least 100% of the total tax shown on your last year's return, which I have an example on screen. And just to clear things up, guys, when it's called estimated tax payments because it's truly an estimate payment. Means you don't need to be 100% precise if you're subject to these, but you should try to be as accurate as possible to keep current with your taxes so you don't owe a bunch of money to the IRS come April 15th of the following year. But don't stress about the exact dollar amount of the estimate. Relax, it's just an estimate. We just talked about who has to pay estimated tax payments. Now let's talk about who does not have to pay estimated tax payments, or when do you not have to worry about them. A person does not have to pay estimated tax payments when a person who expects to owe less than $1,000 or more after subtracting income tax withholdings and refundable credits from their estimated total projected tax. A person's withholdings and refundable credits will be at least 90% of their tax for the year. So they've already paid in 90% of their taxes for the year, so they don't have to make estimates. Next, a person's withholdings and refundable credits will be at least 100% of the tax shown on their prior year return. A person who has no liability in the previous year or no filing requirement. So if you didn't owe any tax at all last year, if you have no filing, or if you've had no filing requirement, you probably don't have to worry about estimates at all. And like I said, ladies and gentlemen, for most people, this is not an issue. But if you have other forms of income outside of wages, like your interest, your dividends, your business income from your side hustle, because you're hustling out there, like so many of us out there today, well then you might need to pay a little bit closer attention to estimated tax payments. Or if your withholdings, when it came to 2018, you filed your tax return. Now you know, and I know, that in 2018, tax laws got a lot different than they used to be. So a lot of people who normally didn't owe tax started to owe tax, and all they had was wages. So if your wages, if you all you make is wages, wage income, and you still owe a bunch of money, you might want to take a closer look at these estimated tax payments if you have not already corrected your withholdings. So for example, let me give you guys an example. So let's say in 2018, you filed your tax return, you were expecting a refund, but all of a sudden you're like,
What the deuce? I owe a bunch of money.
let's say you owed $2,000 when you went to file your tax return. So how do you avoid that going forward? Well, you can do one of two things. One, you can adjust your withholdings, or two, you can make estimated tax payments. If you didn't want to tinker with your withholdings, what you would do is you come over here with your estimated tax payments, and you could make 4 payments. Let's say you're going to owe $2,000, okay? That's what you would expect to owe again the next year. Well, what you can do is you can make 4 payments of $500 each of every quarter. So there's payment due dates, which we're going to talk about in just a second. But you could make $500 payments throughout the year 4 different times, so that when it rolled around to April 15th, you wouldn't owe, or you would owe very little. And that way you could keep current on your taxes, but not stress about changing your withholdings and going through all that rigmarole. I have videos on tax withholdings. If you want to learn more, I'll link all those videos down below. Now here are the estimated tax payments due dates, just so you guys know. For the period of January 1st through March 31st of each year, the payment due date is actually April 17th or April 15th, which is the same day your tax return is due. For the period of April 1st through May 31st, that's not a full 3 months, right? That's just 2 months. Your payment due date is June 15th. For the period of June 1st through August 31st, your payment due date is September 15th. And for the period of September 1st through December 31st, your payment due date is January 15th of the following year. So even though the year is gone, the year passes you by, they still allow you until January 15th to figure out your final estimate payment, to give you a little bit of additional time to figure out your taxes. On page 34 or 59 of publication 505, you will find a worksheet that can help you calculate your estimated tax. I'm not going to do a step-by-step calculation in this video because it would be far too time-consuming, but I will show you a trick of how to do a quick estimate of your taxes. Now here's the quick and dirty way, guys. The quick and dirty way. That sounds really bad. No! Okay, so assume a person's starting a business this year and they expect to make a net profit of $5,000 by the end of the year. Notice I said net profit. For further simplification, let's say that person makes a net profit of $1,250 per quarter. $1,250 times 4 is $5,000. By March 31st, they've received their first net profit of $1,250 $250 on their business. So now what do? There has been no tax withheld on this money, so they should probably consider making an estimated tax payment to keep current with their taxes. A really quick and easy way for a person to determine how much to pay on this new income is just take a look at what their average tax rate is, or they can look at their marginal tax rate or their effective tax rate, either one. Now, the average American, their average tax rate is anywhere from 15 to 25% on average. So even if you didn't want to go look at your own marginal tax rate, if you just said, okay, well, I don't want to look at that, but I'm going to pay at least 25% of that net profit in as a federal estimated payment. So they would take $1,250 times 25%. Is that a perfect science? Absolutely not. But at least they're paying some taxes in throughout the year. To make sure they're on track, they would want to look at it a little bit more closely than that. But if you wanted to be safe and at least pay something in without trying to figure out the exact numbers, you could just say, well, I'm going to pay in of that net profit for that quarter, I'm going to pay in 15% of that. Or I'm going to pay in 20% of that, or 25% of it, 30%. I think you guys get the idea, but that's a really quick and easy thing you can do, and that way you're not stressed about trying to calculate it to the T. Now, in this video, I'm not going to cover how to make an estimated tax payment because I've already developed a full video on that. I have one of the most detailed videos on the entire internet. It's completely free of how to make estimated tax payments. Click this little card icon up here when you see it pop up, and that will take you straight to the video, and I show you 2 to 3 different ways of how to make an estimated tax payment. There are also detailed instructions of how to pay your estimated tax payments that are located in publication 505. Now, earlier on, we were talking about penalties and tax penalties. So how do you avoid it? What are some things you can do to make sure you don't get hit with any tax penalties at all? Because I don't want to send the IRS any more of my money. If your income is under $75,000, if you're a single filer, if your income is under $150,000, if you file married filing joint, here's what you need to do to avoid penalties. You have 2 different options here. 2 options. One, you can pay in at least 90% of your current year's tax of what you would expect to owe. Make sure if you were to add up your withholdings from your job and your estimated tax payments, that it would equal at least 90% of your current year's tax. That's the first way. The other thing you can do is you can pop on over and take a look at your previous year's tax return. So we're in 2019 when I'm filming this. So you would look at your 2018 1040, find the line that says total tax. The line that says total tax, that's what you want to look at. And you want to make sure in 2019, you've paid in at least 100% of what your total prior year tax was. By doing that, you're going to be able to easily avoid those pesky underpayment tax penalties. Okay, so that was if your income was under $75,000 or if your income was under $150,000 if married filing joint. What happens if your income is over those amounts? If your income is over $75K if you're single, if your income is over $150K if you file married filing joint, here's what you need to do to avoid underpayment penalties. Pay in at least 100% of the current year's tax. So when you go to add up all those withholdings so far for the year from your paycheck, and you add up all the estimated tax payments you made throughout the year, you wanted to have paid in 100% of the current year's projected tax. That's the option 1. The other way is, once again, we go back to the previous year's tax form, look at the line that says total tax. We're looking at the same line again, but now, since your income is higher, instead of you paying 100% of that prior year tax, now what you would need to do to avoid penalties, because you're a higher income earner, is you need to pay 110% of your total tax liability. When you add up your withholdings plus your estimated payments, they need to equal 110% of your previous tax year's liability. Now you're probably saying, well, Mike, this information is great at all, but dude, I don't know how to project my tax. I have no idea. And I totally understand that, because I know that probably like 95, 99% of the population, they're not accountants. And I totally understand that. So what you can do to help you easily figure out what your total projected tax for the year might be is I want you to pop on over to the IRS website. I'm going to leave a link to the IRS withholdings calculator page. And what you can do is you can drop in your projected income numbers for the year and see what your projected total tax liability will be. And that's an easy way to do it. I have videos to help you project your income for the year. I can leave links to that below. I also have a video that does a full walkthrough of the IRS withholdings calculator in some ways to analyze it. Takes a little bit of time to do some self-study on this stuff, but once you learn how to do it, you're gonna find it's fairly easy to do. The other thing you can do is there's also a bunch of free tax calculators online. I can leave some links to some down below. And the third thing you can do to help you project your tax on your earnings for the year is you can, if you have, let's say you use TurboTax or H&R Block tax software last year, we'll see if you can pop into your tax return and create a dummy return and drop in your current income numbers or what you would expect to make by year end from your wages, interest, dividends, your business income, pension, whatever. Drop those numbers in, prepare a fake tax return because from 2018 to 2019, the rules haven't changed that much. So it will almost be identical to 2018. So that's another way you could figure out what your total tax liability might be come the end of the year. Okay, ladies and gentlemen, if you stuck with me this far, I really appreciate it. Thank you for sticking with me. Like I said, the handout is free to download. In the next video to this series, what I'm gonna do is I'm going to show you how to project your estimated taxable income throughout the year. I have a new worksheet. I'm really excited. I think it's gonna teach you a lot about how income taxes work, probably more than anything you've seen before. I'm really excited about producing that video. I'll be producing that video within the next few weeks, and I'll have a free Excel worksheet you can download to help you project your income, help you figure out your estimated taxes and all that. That we'll cover in the next video. And these, of course, are the must-know rules when it comes to estimated tax payments that are really hard to find, but I've summarized what I felt were the most important things for you guys to know about right here. If you guys enjoyed the video today, let me know by crushing that like button. Feel free to share this with a friend, especially if you have friends who are business owners, if they have different types of income like investment income from their pensions and things like that. I think they're gonna find these rules really helpful to know because everybody should know that there is an alternative way to keep current on their taxes without messing with their withholdings, and that is through estimated tax payments. Feel free to subscribe to the channel if you haven't already. I'm gonna have a lot more tax videos around investing and finances throughout the year, and I think you're gonna get a lot of good information out of them. You can subscribe to the channel by hitting that red subscribe button down below, and make sure you hit that bell notification icon. That's gonna let you know whenever I release a new video. I try to release a new video at least once per week, and sometimes I release an additional video on Wednesdays. All right, guys. Thanks for letting me talk your ear off on estimated tax payments. Leave your questions, your comments, and all that good stuff down below. I look forward to reading them. As always, have a great week and use this information to live your life uncaged. I love y'all. Peace.